We are familiar with this weekly chart. This is a delayed weekly chart. And at that point, we were looking at the market moving all the way to 176. Of course, the fundamentals have changed because now we are looking at a recession in Great Britain. At least this is what is projected by the Bank of England. And there's now more inflation, and all central banks are actually raising interest rates. And therefore, as a funding vehicle, unless the Bank of England would raise sterling rates, of course, vis-a-vis the yen, you cannot expect a solid appreciation of sterling against the yen. So let's take a look now at how that picture has changed, or how that technical picture has changed. All right, back last month, I believe, or the month before that, we're moving in an ending diagonal here, right? And that ending diagonal was going to take us to 176. This is the next neckline that is right now above the current neckline at which the market is trying to support. The market is trying to support at that neckline here, which runs in at 163.7, right? Now, we expect that the market, of course, is doing a correction. As we move forward, we will be segregating that rise very strongly, and the current correction should be contained at the lower boundary of that ending diagonal and at the neckline before moving higher into a wave 5. You're seeing here a 5 swing move inside of that high degree ending diagonal weekly. There's 1, 2, there is 3, 4A, 4B, and there is also a 4C. It already finished an A and a B and a C, and now this is the breakout into wave 5. This is probably the first leg, or leg 3 into that breakout. There is now a correction. We would consider to segregate that internal very strongly, buy into the correction. Should break above that neckline, take you to the next neckline at 176.49. All right, let's take a look first at what has been going on since last month. Okay, this is the same weekly chart again that we're already looking at. It's more focused, however, on what's going on right now on the weekly and on the current correction. Remember, this is a 5-wave swing inside of an ending diagonal. It has already finished level 3. It did the 4A as shown here. It did the 4B. It did the 4C. There's some kind of a cycle translation axis, and when we go live, we're going to be moving this cycle translation axis higher to incorporate above level 4A, 4B, and that B in yellow. You can already see that the bounce comes in at that cycle translation axis. All right, and therefore we would investigate it when we go to the hourly time frame and to the smaller, shorter term time frames. Moving forward again, we're going to have to segregate this current breakout higher towards the neckline. There has been a rejection now at the neckline. Market actually did a bounce at below 155.85 at around of course 155, and that's always a shoulder. You're looking at this right shoulder here, right? And on the left, you had that left shoulder. It's a very congested shoulder. You can have a lot of very wild swings. But of course, we can see that this is probably a label 3 ending. It would do a 4A, a 4B, a 4C. Maybe that 4C does another 3 internal swings before the market bounces and moves higher on improving fundamentals. We are still seeing a ground inverted head and shoulder. Okay, so let's focus now on the current wave that we expect to segregate. We were looking at this on the weekly chart. This is now the daily chart. We have negative momentum that is about to do a degree 1. Some kind of an A and a B and a C. Let's investigate it in more detail now. We are most concerned with this swing. This 1, 2, 3, 4, and 5. This is really higher than V5, which leads us to resegregate all the swings before it. In terms of proportional analysis, we expect that the current swings shown in white are really now display the current advancing market. So we want to focus on them. This is really what we will be trading. You have here an internal or a high degree 1 showing here in white, and then below that there's of course high degree 2. This is of course a much lower cycle. Then there is a 3, there has been an AB and a C into a 4, and internally we just segregated that move. It is a 5. Now we have a high degree correction. Of course, that higher degree correction already did an A in yellow, it did a B in yellow, it did a C in yellow. This is higher degree A. We're going to get a higher degree B, right? So the current market should be a buy. If when we go to the 15 minutes and the intermediate term cycles like the 30 minutes and 1 hour, we can pick a bottom, buy into this move. It just takes us to wave B. You see here a wave 3, and usually a wave B would just do a second shoulder with that wave 3, and then we get another move down. Remember, we still have a very strong, we expect a strong move down in the dollar yen. This would be a wave C inside of that high degree B. Okay, so of course internally or inside of that leading diagonal, or ending diagonal, sorry, inside of that ending diagonal, we would have done an A here, 5 swing move into an A. It is these white labels that actually count the 5 swing move, and then we would have done a 3 swing move into a B before the market moves higher on better fundamentals into a C. It is that C that's going to be taking us to 176, 174. Remember these levels, of course, they were shown on the weekly chart. Okay, so going forward, the current market, we expect that the current market is about to finish or has finished leg A of that correction. We will wait for retraction, buy into that retraction, take it to 163, maybe take it to 165. But we believe it's just going to be 163 to 165 because we expect either a right shoulder and that red arrow equating with this left shoulder. At the most, it's just going to be a lower hand if the momentum will permit. At that point, we should be selling 167. Takes us longer term, of course, takes us all the way down to the market bottom. We expect the market bottom. This is, of course, will correct the whole move back to the neckline. You're looking at that internal one and bounces at that point coming at 150 and even 149. Again, before you see a high DVC evolve out of that level B bottom all the way to 174. On the daily charts, we are still about to do a wave 1 on the daily or cycle 1 on the daily. Cycle 1 on the daily chart would mean that you get to see momentum bounce at oversold levels here. Alright, let's take a look now at the internals. We were just saying that we should be buying into this. It takes you all the way to the top of that wave B that we're looking at on the daily. That's what we have now on the 4-hour charts. On the 4-hour charts, we still are having correction. Looks like we had a degree 3 correction. That degree 3 correction is finished. We're looking first at momentum. There's now an internal 1 and the 2. It really is an A and a B and a C into wave B in yellow.